All right, hey folks. So Elom Srebi, is that how we pronounce it?
No,
Srebi?
Sribi.
Srebi. Elom Srebi here with myself, and we're about to have a meeting strategically looking at some crypto trades. But then we started to yarn on about some war stories that we're both in the middle of on NFTs. I'm part of one project. We were actually going to get into talking about something I think is pretty wild. Is, Alan was looking at buying some meta land, real estate, and then anyway got on talking about NFTs, and I thought, well, why don't we just record a bit of this because we are not alone here in this. Uh, what can only be described as a shit show on the crypto space. So I bought a couple of these non-chimp NFTs. Really, good artwork, but that does not underline or speak to any inherent value. And there's a game development project underpinning it, and I think everything's gone a bit dead there. So I'm licking my wounds on that one, but it's a write off for now. So where are you at, Alan, with NFTs?
Bit of a mix. I've got I've got some that I've bought and minted that are in the exact same position. As a matter of fact, some of them are um, worth less after the mint than during the mint price. So that's
Right.
painful. Um,
Got
I've
some
got one or
sunshine coming in here. Sorry, hold on.
yeah, yeah.
It's actually nicely getting very sunny in Dublin, but it's there we go, spiking my lens. Sorry, go on.
Yeah, so I've got some that are doing absolutely nothing and are worth less than what I minted them for. And I've got a couple of them that are doing relatively well, or at least have some utility in existing games, and then B are doing pretty decent. Um,
Hmm.
I think initially I was really looking at it as kind of uh, a venture capitalist play, get in there, see how many we can mint early on, and then kind of ride it up. And it
Shift the risk onto the next guy
yeah,
at a
essentially.
premium.
um, but because of the sheer volume of the collections that are coming on, the likelihood that you're gonna, at the very least initially, come across a whole load of just junk is really high.
Yeah.
Um, so I started to kind of look more, and I've kind of stepped away from it a little bit. I'm not as aggressive as I was a few months ago, but now I'm looking more at the either blue chip products or the things that have some heavy real utility, and they're
I
actually
saw,
actually doing
speaking of blue chip products, I saw Damien Hirst is pushing on Instagram a set of NFTs. I think he's releasing 2,500
Is he his is
times four.
I think this is the second set that he's released. His first set did really well. Um, and so if you're looking to buy art, an established name like Damien Hirst, it's certainly not going to hurt, especially in this environment now. The interesting thing is, it seems like that NFT, um, the NFT environment specifically seems to be maintaining its health when Bitcoin and the rest of the other crypto assets are tanking really.
Yeah.
So
And the question still remains for me. Like I have some Axie Infinity coin, and I see the utility, and I suppose this is one of the reasons why I said, we need to start recording what we're talking about here.
yeah,
You brought up this question of utility, and now we're starting to talk. Then you start to have a real conversation about, like, okay, value. How is this value? Where's the utility? How is it being used? How is the utility community there? And Axie, I do like because it's got a healthy implementation of those tokens in the game, right? And it's a lot of users are in there, and you're not really seeing this kind of complete debasement of core value or core utility there, right?
yeah,
Whereas, with the non chimps, that was a complete flyer. Like there's no utility as of yet, even though there's a game project to come. But because there's none of that book value there, or utility value, intrinsic value, they're toasted.
Yeah, so like there's kind of two things with that. Is first, I guess on Axie specifically, they're actually in games like Axie, the more you're actually involved in the game, the gameplay, you know, whether it's just a fun thing, or if you're a gamer and you're really serious about it, you're putting in however many hours a day, whatever. That's when you're really starting to collect that value without necessarily uh, without making it feel like it's painful to do so or expensive to do so, because
Mm.
you're playing the game and you're doing what you're doing and you're collecting value. So in those um, uh, uh, established environments where there's a legitimate game that you can play and that you can use these NFTs and these in-game tokens and whatnot, then those things are going to drive value. Those are
Right.
probably low value a hell of a lot better than someone saying, well, we're a NFT project and then we're going to build a game, because building a game is incredibly difficult.
Yeah.
So if you're not a career game developer or game development studio, the chances of you building a game that somebody wants to play is very slim.
Yeah.
And then when you add the fact that, well, I'm going to give you my money for an NFT, and then you can maybe use that money to develop a game that you've never developed before.
Yeah.
Uh, I think the illusion has been, the smoke and the mirrors have been cleared from that, and I don't think that that's really a viable option. So if if we're looking at game or gameplay type of tokens, metaverses, I think it's really important to look at who's developing it. Is it a large
Yeah.
game developer? What have they done before? And if they're now getting involved in these things like Alluvium and um,
Yeah.
like some of the bigger name games, like it's not developed yet, it's not there, but those are big name studios who know how to create games.
Yeah.
If they're tying that in with NFTs, those are the ones that you want to consider
Yeah.
being in for that kind of game metaverse type of thing. um, I think the other thing was when it comes to stuff like your art, say like your Damien Hirst and all those known names. If you can get
Mm.
in on those sales, that's the type of stuff that you want, because regardless of whether or not anyone's using it, people are going to buy a Damien Hirst, whether it's
Mm.
a print to hang on their wall. Now
Mm.
there's another outlet to buy Damien Hirst, on the blockchain. Same thing with comic books as well. That's another thing that I think that's probably going to be that's going to grow.
Yeah. I think I think the Damien Hirst stuff is going to be interesting. Again, intrinsic value, I don't know. But then you can say, well, look, you're paying for a print to be hanging on your wall. Where's the intrinsic value? When it comes to art, you're not buying it for intrinsic value, really. At a certain level, you're just buying it for enjoyment, right? So, um, I, I'm finding it hard to get dragged into this. Like the guy who bought the Beeple for 69 mil, he's kind of saying, well, he's got this plan to really charge people access to view it in a digital museum sort of concept in the future. And I see that in a metaverse future. But I mean, listen, we're 40% of vehicles aren't going to be electronic until we get to 2040. How many museums are going to be like pulling in 1 million visitors a year by 2040? I'm paying quite a lot for the experience, or something like between $1 and $5 to get access to view that item. I don't see that. I think that's a much longer play. Um, but so kind of moving on in the conversation.
So before we move on, I've got a
Yeah.
question for you. So do you think that we're going to see kind of widespread, ubiquitous uh, electronic vehicles before we see the metaverse really settle in then?
Before the metaverse settles in.
Okay.
Um, oh yeah, definitely. I
Yeah.
think,
So
I
you're looking
think,
like 2030, 2040.
yeah, 2050, man. Like, I mean, when I think of metaverse, I think of Ready Player One. And maybe that's, all right, well, that's the kind of get to point for Meta, and the metaverses, the multiple metaverses. I think that's that's where it's aiming to be. But do I see mass adoption of that between before 2040 or 2050? I don't. I like the tech. I believe in the tech. I saw the Lawnmower Man original version when it came out. I'm a believer, right? But I'm also a realist, right? And that's a trader in me, I suppose, right? So I'm not going to be investing in meta names now. I think there's way more. I think it's a little too bleeding edge right now, right?
Okay.
And so when it's bleeding edge, that means you get involved, you're going to get cut, right? So when something's becoming just on the cusp of state of the art, as in it's reflective of what is the state of the art of this technology that everyone is using, and it is pervasive. Like, I mean, I was involved in a blockchain company 10 years ago, and they'd started that company 10 years before I got there.
Mm.
So, and that was blockchain. So it was bleeding edge for so long, and then people sort of open up to the use cases, really, of what it is now. We were providing data security, blockchain data security to universities and governments. But yeah, I love the tech, but this is a nice segue right into what we want to also talk about is buying land in the metaverse. So I got on the call. I was like 4 minutes late. I was like, damn, I'm late for this call with Elom. And then I'm like, what are you doing? He's like, I think I'm just gonna buy some metaverse land here. That's like, if anyone's on the frontier, it's Mr. Elom here. So
The
who's
fine
done,
line
look,
between bravery
but
and stupidity.
it's wild as shit to a capital markets trader like me in commodities. But you've done very well last year out of crypto in general, and
Yeah.
so
Yeah.
look, what's the price per acreage? What are we talking about? Are we buying acres? Are we buying
You're
gigabits? What are we buying?
you're buying parcels. Um,
Okay.
Most of the parcels are around the same size. Don't quote me on the size. There are some medium and larger parcels in this is within the sandbox specifically. Um, and just about every metaverse has their own way of breaking up those parcels. So Mana, and or rather Decentraland, has their own parcels. Sandbox has their own parcels. Let's, uh, any any metaverse you go, you can buy land, you can buy things to put on that land, properties, home, etc. Some gaming specific metaverses have in-game items that you can buy, put on the land that you own. Most of them come with the land, and those in-game items can generate you income or in-game funds. So let's say I buy a goodness, what's a good example? I've seen things that you can buy a blacksmith, right? Where people come to build and buy swords and things of that nature, right? So you
Okay.
can so you can buy one, you can stick it in a particular town in this metaverse game, and anyone who needs their sword repaired or a new sword to buy, they come to your blacksmith shop, and you
Right.
generate income. If you then want to, there are opportunities to buy a village and rent out homes in the village and amongst the farmers and all that stuff. So So the game aspect of this, especially for these larger developers, is growing and becoming more and more sophisticated, because it's what they're doing is that they're taking existing game um, ecosystems, and all they're doing is replicating it on a kind of, using blockchain and NFT technology. So all that stuff that gamers have been doing for years, they're they are saying, all right, great, you can now own the item, you know
Mm.
whereas I, the game developer, used to own all the non-playable stuff, used to own all the land. If you're willing to buy it, put in, that's obviously going to go towards game development and all that stuff. Now you own it. Anyone comes on your land, or anyone wants to use your item, what have you, you can sell it,
Yes.
you can buy it, you can rent it. And I think that's probably why this gaming metaverse is, it wouldn't surprise me if it continues some really rapid adoption, and it continues to see a bit of a decoupling from the main crypto assets that create crypto market, because it's easy for people to understand that gaming is a multi-billion-dollar industry as it is, probably trillions at this point, God only knows. And all you're doing is you're taking that industry, what people are comfortable with, and you're creating new games.
So you're saying,
You know?
I mean, look, I love a bricks and mortar business as much as the next man. So you're saying I could have a blacksmith, and I could then sell swords or daggers or
Yeah.
steel goblets or anything a blacksmith would make, right, for say Warcraft or a similar game.
Mm-hmm.
And then when I so in order to get my inventory, I could be minting NFTs, and each one of these swords is an NFT.
Yeah, I mean, in theory, you can come in, and someone says, "Hey, I want to trade my, this dagger for that dagger," and then someone else comes in and say, "Well, I've only got a small little dagger. I'll sell it to you because I need money to go for what else." And now you've got something in your inventory. People coming in and selling things and buying things. So I think the particulars of it depends entirely on the game ecosystem
Right.
and what you can do, and what your options are. I think the value then comes with not only what you can do with it, but um, the network effects of that game. So if nobody's playing that
Mm.
game, no one's coming to your blacksmith store. But if you get a good solid game that people adopt quite well, and
Sure.
you've got some good usage, then even if
Mm.
you've got something small in there, that high traffic, you build game in-game assets. And then once something like Axie Infinity, you have the opportunity to swap those game assets or tokens
Mm.
for ETH or anything else, or for
Yeah.
sand or for mana. Now you're talking real world cash in hand, because if I wanted to, I can cash out in ETH and sell my
Yeah.
ETH.
Yeah.
You know?
Well, you don't want to sell it right now. You want to buy a bit more.
Yeah, yeah,
That's
yeah.
well, that's my opinion. But right. So should we all be running out here and buying land? I mean, to me, to put a splash of cold water on this, is that I think you kind of really have to know your ecosystems. You really have to know, you know, where you're well, how to get into the trade. But like anything, like any type of trading, from trading equities to futures to FX to bonds to everything, you got to know how you can get out of the trade. And this
Yes.
is actually, this kind of brings us on to one other thing that was kind of a big deal in the markets was, Time Wonderland project. And I was speaking with a friend of mine who was pretty big in Time. He had quite a position built up in Time. He was getting paid out. He was getting his yield paid in memo coin.
Mm-hmm.
And he was like, if you see Time crashing to me, and I'm like, I'm not looking at Time every day. He's like, okay, well, if it crashes, I'm gonna probably, see a huge debasing of my value, but I'm still gonna get paid out. And so just before we came on to record this, I was talking to you about, your position in Time Wonderland and your staking of the time, and what you're planning to do on that. And so it's got, so basically, the just for people who aren't aware, the APY, I mean, what's the current APY? It's about
It's like 80,000, something like that.
oh 80,000
Something.
80,000% a year, right? So it's attracted a huge amount of people who had like AVAX or something like that to convert that holding to Time Wonderland project and then stake that, and then they would get paid out in dividends at eight. Did you say 80,000?
Yeah, something like that.
80,000% APY on Memo Coin. So essentially, you're getting into ridiculous percentile gains per hour, essentially. Now, so that APY has actually gone up a hell of a lot just to make sure people don't bail on the project, I suppose.
Well, that's the thing. People have absolutely bailed on the project. Um, so I've it's been a slow bleed for that one, and really all of the forks, as they're referred to, the vast majority of
Yeah.
them are either are the vast majority are in the toilet. I really don't know of any that are profitable at the moment. And if they are profitable, then sorry, frog in my throat. And if they
Gotta
are
give up those
profitable,
cigars before 10 a.m.
I got to start my day right, man. Um, uh, yeah. So, and if they are profitable, then they're really really super early on, and nobody knows about them. But these and I'll because I've got money in Wonderland that's worth not a lot anymore. Um, and they were really well designed, in my opinion, Ponzi schemes. And 80, I'm looking on this thing now, 80,000 percent APR. Yeah, that's not sustainable.
No.
Now, the idea was you'd have this really high APY, 81,822. So the idea was
Ridiculous.
you'd have this really high APY, and then it would be backed by people minting other assets, Memo, Wrapped ETH, AVAX, Time, right, and other liquidity tokens. So the idea is you 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 mint your you mint your MIM using these other tokens, which then go into a treasury, and then you're paid out your APY in your time, and you make lots of money. A lot of people did make a lot of people did make a lot of money,
Oh,
especially
so
in
this is a second phase to staking time. So you're staking time in, getting paid in MIM, and then
yeah.
you're staking the MIM to get back paid out in time.
So you can either stake directly. You can go on, let's say, Abracadabra Swap, or I think now they migrated to Sushi Swap. You can go and get some MIM and stake your MIM and earn time,
Oh,
or
okay.
you can go straight to that Wonderline site and you can mint um, MIM using other assets.
Okay.
So what the minting allows you to do is, let's say if I have AVAX and I wanted to use my AVAX to mint time in order to stake it, I would get a discount for the AVAX that I'm using to mint my MIM. So it might be a 10-20% discount. So I get more MIM for the AVAX instead of when I go and just trade it on a decentralized a DEX. I will get, let's say I get 100 MIM for my AVAC if I go to Sushi Swap. If I
Mm.
go and mint it and send it directly into that treasury, then I'll get 120 MIM for that same
Okay.
100 AVAX, right?
Now I gotta jump in here and be the voice of reason. It's all just sucking the money out of your wallet, your digital wallet, and onto highly, highly, highly speculative projects.
Yeah.
And
And I think,
and you're seeing a real rattling. I mean, I think the projects were cruising along for a good 6 months there,
yeah,
paying out crazy. It was like 30,000 APY last time I checked in on this with my friends, and he sent me a spreadsheet of the inner workings of how it was happening and how you could calculate the output of the project. But I was just like, this is just wild as shit, and like it's like a dance that's going on, and as long as that dance or the music keeps going,
yeah, yeah.
and the main coins like ETH
Mhm.
and Bitcoin continue to hold up, fine, the dance can continue. But when it gets fundamentally rocked,
Yeah,
uh, and it feels like the telegraphing of interest rates back in November, December by the FOMC was really the start of all this.
yeah,
Well,
because
then you've got telegraphing on a rise on interest rates, or hike in interest rates, going to start in March, and then suddenly everything just seems to have fallen apart. So,
yeah,
I mean, because and what people need to realize is that when there comes like a headwind, as in for leverage money, which is a rise in interest rates on the horizon, well, then everything starts to kind of shift, and people start to
mhm.
pull money from here and put it there, and across all financial, not only crypto assets, but all financial assets.
But
And so that really seems to be where this has all started. And now I think the music is kind of, you
yeah,
know,
because this was these Wonderland and Ohm forks. These were the risk assets of the risk assets of the risk assets. Like,
all I'm thinking is CDOs of CDOs here. That's
like this was the stuff that people were making ridiculous money, but they knew it was uber risky. So the moment the market took that hit, the first thing people are selling out was this. And the structure is such that if people are buying and holding, these gains are arguably sustainable in some for a period of time. But the
yeah.
moment people start taking their money out, that's when the
Yeah.
problem starts. And what compounded it was the realization that there's this kind of a fair value metric that says the the price of time might be X, but the backing price based on what we have in the treasury is Y. So if you want to speculate and you're far from the backing price, then fine. Everyone, I think, in the industry, when we're talking about these own forks, we're under the impression that if the price were to dip to the backing price, that the treasury would then be used to buy back up, to buy the bottom, to create create a floor on that falling price, and then give people more confidence to say, I'm okay, I've hit the floor. I'm gonna now I'm now gonna buy in. I'm now gonna hold. It's gonna recover. The APY is going to drop as the price goes up, and that kind of dynamic.
So this all, oh, sorry, I'll let you finish.
Right.
Go.
So when the reality hit that
Yeah.
this this price floor, this fair value is an indicative value, and
And no
no
one's
money is
buying it.
coming out of that treasury to buy that. I think it was kind of the death knell for all these own forks. And I would be very surprised without some serious redevelopment and changing of how these things structurally work, that
Yeah.
they're coming back. I think it was a good exercise in some of the technology and some of the whole idea behind it. But once people realize that, look, these protocols aren't actually backed by anything, they require constant additional input. It's almost a definition of a Ponzi, just dressed
Right.
up really well.
So, but is that all we've learned here? I mean, so to kind of really put a bit of shape in this chat is like, I don't think this is just right. Everything crypto, DeFi, it's all just vaporware. You
Oh,
know,
no, no, no. Yeah.
I don't think we're at that point now. People suffering 70% pullbacks on their P&L in crypto are probably thinking, Well, holy shit! But you
Whatever
know,
that makes sense.
people held the swing down Bitcoin from 19,000 top all the way down to 3,000 and back to 60. So like, you know, this is kind of a marketplace where people hold and they do not get in for the quick flicks, right?
Yeah.
But from this pullback we're seeing, right? It's, you know, really, I kind of look at this from a bit afar because I'm a long time holder of these sort of assets. Like, what can we learn from the current debasement that we're undergoing in crypto? I mean, you know, can we learn that, you know, are there is there a bona fide to this complex kind of bond and yielding sort of structure that projects are trying to do on their own platforms and they're doing that to be kind of
Mhm.
have their own ultimate bank in a way and
And
their own
yeah,
economic system.
and that was the purpose, you know, to be the stable coin, or to be the bank um for crypto, or to be the bank for
The
the
metaverse.
metaverse,
Yeah.
right?
Yeah.
And I was thinking about this the other day, and I was like, it seems like you've just tried to recreate Bitcoin and failed, because in essence, right?
But why do you want to recreate Bitcoin?
I-
It's not even an ERC20 token. It's not even a smart contract.
because if you hold because if you hold the treasury, you now have a whole heap of assets sitting in there. Now I've seen other projects to say, we're going to pivot, instead of giving you this ridiculous APR, your stake, your you know your wrapped asset of whatever, provides you now a stake in a venture firm. So we're going to now act, that treasury is now going to act like a venture capital firm and
Okay.
invest in other projects. And then by you holding this you know, wrapped asset, or you know, mim or time, or whatever it's going to be, or ohm, or whoever, I don't think Ohm is doing this. You now have a stake in that venture capitalist firm, for lack of a better term.
But
Right.
well, you have a liquid stake,
Yes, you have a
right?
liquid stake. Yeah.
Whereas if I was to put money into a venture capital firm or private equity fund, I would just all I need is a contract and someone I can call on the phone and shout at if things are going to shit, right?
Yeah.
You know, so I suppose, yeah, it's like maybe trying to reach too far too fast in a way, right?
Yeah.
And now you're seeing, to me, I don't know, what do you think? It's like we're going through an age that is a step on the way to being where we will be in the future, right? And so, you know, that's like with anything that's become sort of radical and paradigm shifting, right? So, but
And
what is this step
mm,
going to, what's the next step? Are we kind of,
you see, I
is this where like crypto is meeting traditional assets of, you know, now you see in the interest rate environment's going to start picking up in March, and now the two ecosystems are going to try and have to live more and more together. You've got Chinese crypto coin is out there already, the central bank digital currency.
so uh, I'll say so. Okay, all right. Maybe let's park these super speculative products like your Wonderland and your Times and your Ohms, because what's going to come out of them, God only knows. I've no clue, because they're so speculative, they're so experimental. You know, they're now pivoting from a, hey, you can store your money here, and then you can, and as long as people hold and trust in the community, then you'll have great yields forever. And that didn't work, because people need to pay their bills, and oftentimes people overextend themselves, panic when the market drops, and then sell. That's just that, it happens. So they've pivoted from that, and they've realized that that's not a robust thing, that can't work. Now it's, well, we're going to take the money that we already have, and we're going to invest in venture, invest as a venture capitalist. So that particular space, what they're doing now is I think they're just trying to find what's useful for them and how it's going to work. You know, even the legal and political structure around um, these DAOs is still in question, what you can and cannot do and can and
Mm,
cannot buy. So it's super, super speculative. So let's kind of maybe park that because it's just bubbling. God knows, who knows what's going to happen. When we kind of pull it back a little bit and start talking about DeFi and DeFi as a whole, I
mm,
think DeFi, those, Sushi Swap, your Binance swaps, all of those, your all those platforms that allow you to earn yield, I think they're here to stay.
mm,
What I think the challenge is making them easily adoptable so that you don't have to panic every time you do a transaction, and you don't have to worry about whether or not you're going to get this right and figure this out. And people just want to have something that they can say, boom, here's my money, you're going to give me 10-20%, great. I don't need to worry about, well, I can take this yield farm and take this token here and then put it on this yield farm, and then I can then take the money from that and stick it there. Like, nobody wants to do that. Nobody's got time for that.
it
If
is
you have time,
complex as
it's really
shit as
complex.
well.
If you have time for it, you can make considerable gains, especially now while it's still a bit clunky.
I mean, the one thing that I was going to mention earlier is I spent actually the last 6 months of last year reading a bit about market history, bubbles,
Mm,
crashes, all that stuff, like the railway bubble in the UK, South China Sea bubble, all of this crap, and
yeah.
like multiple different kind of, the tulip mania, all this stuff, and where it really kind of, the last kind of phase that seems to be most common across all of them, whereas was where you reach past the initial hype and interest, and that's fine, and it's hot. That's the hot phase of the bubble in a way.
Mm-hmm.
But where things really, where the wheels start to come off the carriages, is where you get the derivative products come in,
Yeah.
right?
Yeah.
And so like with the railway boom in the UK, right? You would have two tracks going from the same place to the same place, and they were moving in parallel. Now there were the plans, and some were actually built, but to kind of rewind a bit, you have that hot initial investment because there is a catalyst there for it. Like there is a boom in a way, requirement for transportation in this case, right, in the railway system. But it's where the derivative products come in, where you have the CDOs, if you like, right? If you go look back at the Big Short and all this, right? You
Yeah.
can have bets on bets,
Yeah.
and the sort of subprime brokerage in a way, and subprime products. So this is why I'm quite happy trading Ethereum, Cardano, and Matic, or these things, but I'm really not happy or comfortable trading in these sub derivative things where you're just getting layer upon layer of what we would call in traditional financing, you call complex gearing, right? It's how is
Mm-hmm.
this project set up and financed, and what is the interest rate in here, and then that's got to be passed through another intermediary, and then there's an interest rate there, and you know what, everyone's getting paid apart from the person who's actually holding the trade, right? So
Mm-hmm.
for me, a hypothesis I had and still have is that crypto is just the greatest thing to happen in brokerage ever, because it's just, and I saw this when I started trading, like intraday trading on Bitfinex, like in 2018, 2017, was that the brokerage fees were massive, absolutely massive. And I don't know. I mean, I just think we need to have a flush out of all this derivative sort of trading bullshit, even sushi swap and all this crap. I don't know. I don't know.
Yeah. I've got I don't know if my take is the same as yours, and what we're talking about, but like, so if you're trading futures products on, let's say, your ETH or your Bitcoin. Oh,
Sorry.
you're right. Yeah, no,
Yeah, just someone was. That's all good.
So if you're trading ETH Bitcoin on the futures, right? I I'm actually starting to look at avoiding anything large enough to have a futures contract, because what you then get, I think, is a more honest not institution, more honest retail and therefore technical chart. I think the as you get larger in the market share of these products get larger, and they get, they get bigger, and they're large enough to attract professional investors, professional traders. They're smart and they're well equipped and they're the best in the game. All right. And I low key feel horrible for saying that, but a lot of the smaller projects who are not big enough to yet attract this kind of attention from, institutional players, for lack of a better term, are still driven by these very, very pure
Yeah.
psychological drivers, which
Animal spirits.
animal spirits, which technical analysis loves, because we can see it on the chart
Mm,
plain as day. They sit within, really, really tight tight trends, and they do what they're kind of supposed to do, and you're not necessarily worrying about the noise
mm,
uh, of a fund who needs to rebalance at the end of every quarter. You're not necessarily worrying about that it's big enough to, it's going to get, if Bitcoin gets hit, these other things get hit, right? But Bitcoin gets hit first, and then these things follow in more dramatic way. So if you're paying attention, you see
mm.
the hit coming on Bitcoin,
Yeah.
then you've got a lot, you've also got the opportunity to potentially front run some of this stuff. So I
Yeah.
think for me, those medium cap tokens, before we start getting the derivatives on them, I think those are the really gold mine for people who are willing to trade in that environment.
Mm. Well, we haven't come up with all the answers to all the questions really in this chat, and
No
that
way.
wasn't, thankfully, that wasn't the exercise. But listen, this is a good chat, and no doubt we'll there'll be more to come. Um, we'll wrap it up here, and we'll get around to talking about what we actually meant to start talking about at some point. But listen, thanks for tuning in, everybody. Do check us out on duggancapital.com, and listen, do hit the like and subscribe button, and we'll be going live later on today for NFP. Listen, thanks for tuning in. Talk to you soon.
All right,
Just
buddy.